Having looked at all of those specific items in more detail, we're left with a number of additional income items that are just, I don't want to necessarily say they're minor, but are probably smaller and don't have all of the details, and just kind of a list of things that we need to keep in mind that are also, if they exist for a taxpayer, income. Now, we'll see here that a lot of these are not going to exist. Many taxpayers aren't going to have any of these or very many of these at all, but these are just some of those things that go in as additional income. And so when we're talking about additional income, it's going to be reported in Form 1040 Schedule 1, all of those additional income items that they have. We start with the refund of state and local income taxes. Taxpayers who itemize deductions may claim a deduction for a state and local tax or a SALT that they paid. This deduction is limited to $10,000 or $5,000 if you're married filing separately. None of the refund is taxable if in the year that the taxpayer paid the taxpayer either didn't itemize deductions or elected to deduct state and local general sales taxes instead of state and local income taxes. Now, another one is alimony. We talked about alimony in a couple of places. This is the payment to a former spouse that meets the criteria of alimony, and it's included in the gross income of the recipient. Okay? Payments to that former spouse that meet the requirements of alimony are included in gross income of the recipient, maybe. Property settlements or payments of court-ordered child support are not alimony and do not qualify as income or deduction items. But we make alimony a little bit more interesting because there's the fact that agreements after the year 2018 are a little bit different. An agreement executed after December 31st, 2018 is no longer deductible by the payor spouse and is no longer includable in income by the payee spouse. And so it's not changing whether or not this amount is going to be taxed. It's just changing who gets to include it. And then if the agreement is after 2018, it is no longer deductible by the payor spouse, no longer includable by the recipient spouse. Other gains and losses, a taxpayer uses Form 4797 to report the sale or exchange of business property, some involuntary conversions, the recapture of depreciation on certain business property that falls below 50% business use, and ordinary gains or losses of securities traders using the mark-to-market election. Again, so just kind of a handful of things here that, again, most taxpayers are not going to have. Unemployment benefits. The IRS considers the amount of unemployment compensation to be income, and it is going to be taxable. Bartering income. You need to report the fair market value of property or services received in bartering as income, and that fair market value should be determined at the time of the exchange. And so you're not allowed to exclude income by simply saying, I didn't get cash, I got something else. Those bartering transactions need to be included. Bribes and kickbacks. If the taxpayer receives a bribe, kickback, side commission, push money, or other similar payment, it needs to be included in income on Schedule 1 or on Schedule C, depending on the activity it came from. Canceled debt. Generally, if a creditor cancels or forgives a debt, the debtor needs to report that canceled or forgiven amount as income. Okay? If you don't owe the money anymore, that is income. It's a forgiven cash outflow of the future. If the creditor intends the canceled debt as a gift or bequest, the debtor does not have to report it as income. And the debt includes any indebtedness for which the taxpayer is liable or which attaches to property that is held by the taxpayer. Now, there are some situations where we are not going to consider something as canceled debt, and it's not going to be canceled debt that we count as income. So, these situations where this canceled debt does not count as income: bankruptcy, insolvency, a price reduction, certain student loan indebtedness, qualified real property business indebtedness, qualified farm indebtedness, and qualified principal residence indebtedness. There's details to each of these, but we don't need to know all of those details. We just need to know that there are some situations in which a canceled debt is not going to generate income. Gambling winnings. Taxpayer needs to report gambling winnings, lotteries, raffles, whatever it is, as income. They also need to include not only cash winnings, but the fair market value of anything else that they won. That needs to be included as income. Now, a taxpayer can take gambling losses as an itemized deduction, but only to the extent of gambling winnings, which means a taxpayer may not report a net loss from gambling. You can have net income from gambling, but you cannot report a net loss from gambling. Hobby income. You're doing something as a hobby and it generates an income for you. Well, taxpayers who make money from a hobby must report that income on their tax return. Now, the IRS presumes that an activity is carried on for profit if it produced a profit in at least 3 of the last 5 tax years, including the current tax year. And so this is drawing that distinction between what is a business and what is a hobby. Okay, hobby expenses are no longer deductible as miscellaneous itemized deductions. The taxpayer must still report the income they receive from that hobby, however. Illegal activities, again, hopefully you're remembering that not everybody has all of these. Income from illegal activities, such as dealing drugs, if you're selling drugs, needs to be included in income on Schedule 1 as other income or Schedule C as self-employment activity. Jury duty pay, you get compensated for being on the jury, that's included in income, but if the taxpayer needs to give that pay to the employer because the employer pays the salary while that person is serving on a jury, then they get to deduct that as well, and so it would be an income and a deduction. A rental of personal property. Okay? This other income includes income from the rental of personal property if we engage in the rental for profit, but we're not in the business of renting such property. I rent my lawnmower to my neighbor. Okay, something like that, that's going to be included as well. We also have court awards and damages. To determine if a settlement amount is received needs to be included as income. We need to consider the item that settlement replaces. Okay? Now, these are the items that are ordinary income. Okay? These items here are going to be included as ordinary income. The interest that we get on any award that we have. Compensation for lost wages or lost profits in most cases. Punitive damages, doesn't matter what caused it. Amounts received in a settlement of pension rights if the taxpayer didn't contribute to the plan. Damages for patent or copyright infringement, breach of a contract, or interference with business operations. Back pay and damages for emotional distress under Title VII of the Civil Rights Act of 1964. And attorney fees and costs where the underlying recovery is included in gross income. Now, we do not include in gross income compensatory damages for personal physical injury, physical sickness, or emotional distress that's attributable to a physical injury or physical sickness. Now, continuing prizes and awards. If we win a prize in a lucky number drawing, television or radio quiz program, beauty contest, or anything else, it needs to be included in income. So if we win $50 in a photography contest, we need to report that as income. Now, if we refuse to accept the prize, then we don't have to pay the income taxes on that.